Hello and welcome to another update about render. So the render chart is now in the support area. I think it was in the support area already when we talked about render last time. And it's still likely that render will go a little bit lower, not because it needs to, okay? It's definitely done what it needs to do in this correction. I mean, it's an ABC structure to the downside from that March 2024 high. A wave down, B wave up, C wave down. So it is a three-wave move, and it reached even ideal targets. It reached the Fibonacci support zone. In addition to that, in one of the recent videos, we added together this blue target zone, which is just an additional area to watch, which adds additional parameters to the chart. Specifically here important, the 100% extension and the 123.6 extension at $3 and $2.17. Why are these two important? Because they are the ones that kind of overlap here with other levels. First of all, the 100% extension is always an ideal target for a C wave. The C wave down, that started in December 24. And then the 123.6 extension is also an ideal C wave target. And it's very close to that 232 level, which is the 50% Fibonacci retracement. These would be the next levels to watch. Now, it already reacted here to the 100% extension. Okay, it dropped briefly below it, but that was quite a rapid sell-off, so that's where the bulls turned up. But it has not led to a five-wave increase. So my communication in the previous videos was about we need to see a five-wave move up from the March low to suggest really it's bottomed. The price is bottomed, but there hasn't been a five-wave move up. This is a crystal clear A, B, C structure. And therefore, the assumption is we'll get another low. So any low could be the last one, but the chart is the chart is prepared. It doesn't need to go any lower technically, but because the rally was only in three waves, it's likely it's going to go lower. And it's starting to look like a five-wave move down in the making in this C wave. So if we assume that a fourth wave triangle finished here around the 21st of February, then the decline afterwards was likely the A wave of 5. This was a B wave bounce, which didn't even break above the recent high. So that was another requirement to indicate we're getting back into an uptrend or the bulls are regaining control to get at least above one of the previous swing highs here, for example, at $4.18 or $4.46. But price stayed, clearly below that level. And we're now probably setting up here for a test of that next support cluster between $2.33 and $2.17. At least I would be prepared for that. And at the moment, it looks like we are in the third wave to the downside internally, right? Yeah. So this C wave that started here with that recent high on the 26th of March, that C wave down would be a five-wave move. And we seem to be in the midst of an internal third wave. So that means as long as we now stay below the last high that formed at 382, the pressure is down and we should get to 217 to 233 next. That's the update on render. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.